Over the past 2 weeks, sellers in the Calgary real estate market have definitely been caught by surprise. And what do I mean by that? Things have definitely taken a turn in the last 2 weeks. A lot has shifted. And while it's not been a blanket impact on the entire market as a whole, and you can calculate that sentiment across every single segment and part of the city, there are certain segments and especially certain parts of the city that are seeing a dramatic downturn. And that's where the sellers are bleeding. And buyers are definitely coming in to take advantage. However, with a huge drop in sales that we are seeing, that also shows that buyers are being very cautious. However, now is a good time to make a very calculated move, and it might not be the right time for everyone. It all depends on what your personal goals are and what you're trying to achieve. And based on this video, maybe that will help inform whether you should be taking part in this market and where the market's headed from here. Now, as you know, I'm a huge data geek, and if you've been part of this channel, you've probably gotten a lot of value from all the information I provide, because not only do I wait on a monthly basis for the Calgary Real Estate Board to release their data, which to me is already quite outdated by the time it comes out. Instead, I collect data on my own spreadsheets and I make videos on my YouTube channel so that you stay informed on a weekly or at least bi-weekly basis. So you're not making a decision based on old data. And so that's what this video is about. It's purely about everything that I am analyzing on the back end so that I can help inform my buyers and sellers how to make the best moves in the current market. Now, if you're planning to make a move in the next 3, 6, or 9 months, definitely reach out, because depending on what your short, mid, and long-term goals are, we would design a game plan for you, whether it's not right time to make a move right now or maybe down the line. And depending on what that is, we would set up a different game plan versus being caught off last minute when you decide to enter the market and then you don't know what the market sentiment is at that time. Now, without further ado and without wasting your time, let's get right into the data so that you know what's happening in the Calgary real estate market. So before we get started with what the current data is doing, it's important to understand how different segments of the market behave long term. And while it's easy to look at the benchmark pricing or look at seasonally adjusted benchmark pricing, what I really like to look at is the house price index, because that shows you a clear picture and a better indication of what percentage and what multiplier the market is increasing or decreasing at. And right here, I have the graph for the last 2 decades. So that shows you long term what you can expect. And as I always say, as far as your investment basket goes, or even when you're buying a property, always expect long term. Never expect to buy a property today and sell it in 1, 2, or 3 years. 3 years maybe, depending on your personal situation and depending on where the market is going. But if you are a flipper, then that's completely different, and this video is probably not for you. But if you're a home buyer or just a long-term investor, then this graph is going to make a lot of sense for you. And what's important to notice is if you're expecting midterm volatility, you can see that as far as single-family homes, overall long-term, they of course see the most appreciation. And this has to do with the amount of supply that we're seeing for single family homes now in Calgary. Calgary used to be heavily a single family city, but now that's dramatically shifting towards the multi-family segment, especially given with the rezoning that we've had in the city last year. So you can see all three segments, single family, row townhomes, and apartments are shifting down. But when it comes to volatility, of course, apartments has the most volatility that we've generally seen over the last 20 years. As you can see, even on a short-term basis, on a year-to-year basis, or every 2-3 years, there's far more fluctuations up and down, versus single family is generally a lot more stable, a lot slower to correct. And we'd had a dramatic shift up right here around 2021, and that shot us up right about here. But when we look at the data prior to that, single family still remains a lot more stable than other property types, and which is why if you can afford it, I generally recommend single families with maybe a mortgage helper in the basement suite, and that helps you a lot to have just a stable property overall while helping pay down your mortgage. And of course, we have to check your affordability. I don't ever recommend going all the way up to the maximum amount of your mortgage eligibility, because that's really your max debt to income ratio. And now if you're looking at townhomes is somewhere split between the two. It doesn't correct as crazy as apartments. If you see over this 2015 to 2021, apartments definitely corrected a lot more. And townhomes is that perfect balance between single family and apartments where someone still feels like they own their own piece of property without feeling like they're part of a building. And so that's why there is that appeal to it without having the affordability of a single family. So looking at this graph, you can see the amount of volatility that we see. If you're buying an apartment now, is probably a terrible time. I would actually not recommend you to buy an apartment right now. There will be a time for it. I would expect a lot more correction here. Even for townhomes, certain areas I would recommend. There are certain areas that are still going up actually for townhomes, just because there's scarcity, there's high standards of living in those communities. And so potentially there is certain communities that I would recommend for townhomes. And as far as single family, you're generally okay. But if you get too far from the city center, that's when you're dropping value, unless you go to very specific communities that have a lot of value for families and people looking to move into those communities, like Mindapore, or a bunch of communities in the southeast like Mackenzie Town, Mahogany. Mahogany now, of course, has a lot of construction happening. So again, you've got to keep an eye on where's the construction happening, where's the supply coming in, what's your future competition going to be depending on where the new builds are coming, and where there is scarcity, where people are looking to move, where the sales are happening. When the sales drop like how they are right now, you have to see where those sales are happening, because that will show you where the true demand is. In the last 2 or 3 years, it was a rising tide raises all boats, and any property anywhere in even high crime areas were pretty much selling in multiple offers. And so that's not a good indication of location, of where you want to invest. And so now is a good time to really understand where, when the sales drop, where the buyers really care, what communities they care about, and what property types they care about. So let's get right into that. Right now, you can see here, this is over the past 1 week. So we've had 936 new listings, and out of that, 571 only went pending. And that is not a great number. Ideally, you want to be around 700 at least to show a good turnover. So when the next market report comes out, I'm definitely expecting a huge drop in the sales to new listings ratio. And because even sales is only at 521, so we're having a huge buildup of inventory. There's still a lot of properties coming on the market. The new listings is probably still lesser than what we saw last month, but the inventory increase will be dramatic just because the amount of pending and sold is not enough. And to prove this point, let's take a look at, this is based on last month, just to give you an idea where we were. So you could see that we were still getting 2,000 new listings about for detached and about 1,000 for apartments, right? And then that brought our inventory up to 3,000. And I'm expecting the inventory to definitely be higher than all these numbers that we had last month. And as far as our sales to new listings ratio, these might drop a little bit, therefore increasing our months of supply this month. So this is from last month, but this is just to give you an idea of where we are coming off and what is the base benchmark. Now, this is all data that I collect, not available anywhere else and exclusive to this video, and things that I share with my buyers and sellers. So I actually track a very interesting stat, which is sales happening per day. And this is all the way from back in Jan last year. And you can see last year we peaked right around here and we sustained that for 2 months. Now, this year, so that happened around, I would say about April 10th. Over here, around April 10th, we still didn't hit those levels. We took a long time. Why? Because of tariffs, because of the uncertainty in the market, because of the rate cuts. Everyone was scared in the market. Sellers were scared, buyers were scared. And so they all took a long time to really come to the market and help market activity. So market activity reached those levels of last year, interestingly, but it only came in May and only sustained for 2 weeks. So instead of 2 months, we only really had 2 weeks of spring market, which is crazy to imagine. So what do you think? A huge amount of inventory buildup is going to happen, and this is for detached properties only. But at least if we could sustain those levels. So last year, when we hit those levels, we sustained it for a little bit. Then we saw a drop, which is expected in the whole schools closing, time off, people stop shopping. That's expected, but we dropped dramatically this year. So this is the data that's not out yet. You're going to see it in the July report, but you can see a huge drop in sales, very different curve from what we have here versus here. And so therefore, huge inventory buildup, and therefore sellers are left stranded on the market. Properties listed for 80 days, 90 days now, especially apartments and townhomes. And that's giving a huge advantage to buyers to get ahead of the market. For example, a new build that we bought recently for one of my clients, originally it was listed somewhere around the 790 mark. And after being on the market for over 120 days, we actually got it for 725. So obviously there's huge discounts to be had. You just got to know how to read the stats, read the area, see what's happening, see where the demand supply. Because for these builders, they still profit, but the carrying cost is too much for them. So they'd rather give you those discounts, rather give you those finished basements and other finishes in the house, depending on what stages it is at, rather than hold the home for the next couple of months. And that way you're getting ahead of the market. So even if the market is dropping because the valuation on that property was definitely higher, so you're getting ahead of the market, but guess what? You have a home today. So there's a lot of ways to navigate this market depending on your goals, and definitely reach out if that's you. So now looking at price drops, you can see here, this is another stat that I track. This is now just the last 3 months, because 1 month's not a trend, but 3 months is. And you can see the price drops has been pretty consistent, very few price increases happening on properties after they are listed. But we are definitely seeing a saturation right around this point, which has led to the trend line increasing a little bit more to the downward trend. Now, we don't have extreme price drops, which indicates to me a potential capitulation point. And if you don't know what that is, it just means that the buyers and sellers can finally understand each other, and sellers are finally pricing their property maybe closer to what the market expects and probably closer to where the buyers are at. And I think all of that comes really from the tensions between not being able to sell your property for a long time and finally realizing that your property's real value was overinflated based on where the last 2 and 3 years were. And so now you know what the real property value is based on what today's someone's willing to pay. And you come to that agreement point and you list it correctly. And I think that is extremely important. So we saw this huge deviation right about here. And now we're capitulating back upwards, setting lower and lower highs for the amount of price drops. So we will monitor where this goes. And this, again, I can pull it per community type, per property type. So depending on where you're looking, we can decide to see how much of a price drop we can get. So we can maximize what's available for that particular community, making sure you get the best deal you do. Now here, detached selling above and below list price. So you can see most properties were, of course, selling below list price even after the price drop. So this is at the point of sale. And you can see that trend line slowly starting to increase right around all of July, and has saturated a lot towards the end of July, right about here. What that shows is correction. Finally, sellers are understanding true value, like what I said before. And so they're setting the price correctly, or they're willing to let go of the property at the correct price, essentially. So we're going to see definitely a correction in the benchmark price. It shouldn't be too dramatic given how volatile or less volatile essentially detached is. However, we will see a correction, and then we should essentially see a little bit of a sideways movement or just a little drop after the couple months from there. Looking at how long does a detached property stay on market now. So you saw right here, we saw a little bit of an increase from where we were in May, because May we were below this line. We saw an increase right about here, but the increase from late June to July was quite a bit more. So definitely, again, indicates those pressures. Sellers are having a hard time staying on market. They're getting frustrated. I have had a lot of scenarios where people get stuck between two properties, and then they reach out to me, and then they realize that the staging was off, the marketing, generally a lot of the marketing can be off. We do a lot on my team to not only, if your agent is only putting it on MLS and then sitting back, that's a problem. There is a lot more opportunities available for marketing. We actually call a lot of people. We go door to door. We market your property like crazy. We market it out of the province, which is extremely important. And I think this is where marketing will really shine, where you can't really be lazy with selling your house. And that's going to be very, very important in this market. However, the days on market is increasing right here, and so sellers are seeing that and correcting their prices and selling more below this price, and finally unloading those properties. Of course, there's still not enough sales. So as you can see, the detached sold price over time from the last 3 months has been on a constant decline, and each of these segments is about 50,000. So that's about a 25,000 drop, I would say, 30,000 drop in the last 3 months. Of course, this is aggregated across all of Calgary. This is not specific to any community. So if you want to know for any community, definitely reach out. Now let's take a look at how many active listings that we have and how many sales are actually happening. And this is where it's a clear indicator of what the market sentiment is. So you can see over the last 1 month, there's no data out on this yet. The next Calgary real estate report will show this, but you're getting first look at this. You can see right here, huge drop in sales, huge drop in sales. However, the amount of inventory that we have on market in terms of active listings just dropped a little bit. So obviously we still have a lot of new listings hitting the market. And if anything, this is very, very important. Generally, it's about 4 weeks after back to school when people at most will be willing to move. Very important. So that gives you literally a month-ish from now. And if you wanted to sell your property this year, now might be that window to capture that market, because definitely expect a slump after that. And then depending on the volatility in the market, maybe, again, we saw the peak doesn't last a whole long. So I don't expect much for the fall market, which is what I'm talking about. However, we can capture some of that sentiment. And then we're going to head into winter, which is definitely going to see drop in inventory, but I also expect a huge drop in sales compared to last year. So that was detached. Now, there's one more. So this actually puts numbers to this graph. And just to give you an idea, so last August, we were at 2,000 in terms of active listings, and 1,000 of those, or we had 1,000 sales essentially in that month. That's a good number. That's 50%. That's a very healthy market. However, this year, we are at 3,000 active listings and only 800 sold this month. So that is 30% versus that is 50%. So that is a huge drop compared to last year. And that is by August. So July was probably even better compared to our current July. So that gives you a very clear picture of what's happening in the detached market. Now let's move on to duplex. And duplex follows very closely with detached, has a little bit more volatility, but there's a huge supply shortage in terms of duplex. So they do see good price appreciation at times, but you don't always have buyers or sellers sometimes in the market. So right here, you can see we hit those peaks again in April and May. So we held it for about 1 month last year. This year, we held it for a day. That's it. It didn't even hold up. It quickly dropped down, and that's when duplex peaked. That was the best, and that's it. And now we are huge decline from there. Again, very similar to detached. And when we're looking at the price drops for duplex homes, we had a huge amount of price detached. I'm all over the place with this. So with duplex, we had a huge amount of price drops happen right around here. So around the June time, we saw a little bit get better, but now I expect that to come back down. We only saw it got better because of that little peak that you saw earlier, but considering the sales are coming down, I expect a correction. In terms of the amount of properties selling above and below list price, so as you can see here, that's when we had sort of like a little bit of a healthy segment where we were just trending sideways. But then after that, it started pretty much declining down. So you can see the straight line from there. That's how much we've come down and selling below this price. So that shows you that sellers are willing to capitulate, again, indicating now how long this trend line continues down before it goes sideways. We'll have to see. I don't expect it to be too much, probably 3 months of this going down, and then we would see a sideways movement, and then we would see more of it come down probably towards the winter months, which is December and Jan, where there's also a lot of good deals to be had. Now, in terms of the days on market for duplex homes, you can see here it shows price appreciation. Days on market is also going up for duplex homes, so no surprises there. Nothing crazy, but a little bit, which does add to that frustration. So if you're a duplex seller, you know why. And it's very important to set the right expectations going into this market, so you know how long you're expected to be on market and what price you should go at, so that you're not part of this upper segment at least, and you're somewhere down here. That's the ideal marketing strategy, is to place you there so that you get the best bang for your buck. You're not on the market for too long, because once you're in the market for too long, you're dropping your price, you're selling below this price, you lose interest, and then lesser and lesser marketing works. Now, as far as selling above and below this price, see, that's when we had the little peak. A lot of people actually went for duplex homes around that time, because there was a huge supply shortage for duplex homes in the last 2-3 years. So I do expect a lot of people were waiting on the sidelines for duplex homes, either because of affordability, they can get those detached homes, or they just wanted duplex homes in a certain community. So sometimes you want a specific location, you want a duplex home. But now that has corrected back down to around here. Of course, when you look at the bigger picture, it's really not that bad. We are pretty much back to close to May level. So we went up and came back down a little bit. And now this is again, huge indicator of the market sentiment, buyers versus sellers. So this actually had more of a sideways movement, if anything. So we have the same amount of inventory that we had last month. So obviously we've had a very good amount, healthy, active, new listings come on the market for duplex homes. However, the sales has dramatically dropped in the last 2 months. So now that is definitely going to show some effect on the benchmark price. And to give you an idea what that looks like, so last August we had 344 in inventory and 171 sold that month. This month we have 569. So significantly higher than last year. And duplex is always a lot lesser in number generally, because just that's how much inventory is generally there on the market. It's a much smaller, it's like 10% of the whole market segment in terms of the number of sales that happen. And you can see here 171, 152. So we had sales but decent. We had a good peak right around here, 250 in May, but that dropped fast. And that, I expect that to keep dropping, because obviously you have a lot of inertia here in terms of like how much it's dropping. But the fact that this is still sustained and it's going up is not a good indicator. So there's chances that we might see more of a correction, a lot more of a correction on duplex, just because we are seeing lesser and lesser buyers, unfortunately, and a huge amount of sellers. And what's happening on townhomes? So you can see townhomes, we hit that peak about April 4th last year, and we sustained it for a long time. So April, May, June, July, yeah, about 3 months. And April, May, June, more like 2 months actually. And this year was not bad. We actually hit that peak around March, also sustained it for 2 months. However, the key difference to see here is we sustained better lows, but over here we dropped dramatically when that uncertainty of Trump's tariffs and just panic countrywide. A lot of people didn't want to buy, stayed on the sidelines. That's when we had a huge drop. That's when actually I got some really good deals for a lot of my clients on townhomes, 50,000 under actual market value. So there was a good option there. We captured that, and then it came back up here. People started returning back to the market, but guess what? Since the overall market sentiment has shifted dramatically, that didn't even come down slowly. That just crashed right here. And so therefore you can see the trend line heading back down. And so that's what's happening with townhomes as far as the sales per day. Now, when it comes to price drops, you can see the sold date. So the amount of price drops happening, there was a huge price drops here as the uncertainty hit around here. So after April was a good time, and then the uncertainty hit. So a huge amount of price drops. But I would say, as far as price drops go, townhomes is doing a little bit better. Not necessarily that is a positive thing. It all depends on whether the sellers are actually being stubborn or has the market already capitulated. And we'll see that going forward depending on the price correction. So when you see here in terms of price, townhome selling above and below this price, you can see they've consistently been selling below this price. And you should expect a really good discount of at least $5,000 to $10,000 minimum. Of course, you can see there are a lot of instances where you can get up to 25,000 below the list price, depending on, and this is after price drops. So sometimes there's price drops, and then after that there's even more selling below list price. So depending on how much they corrected before, you could be getting 50, 60,000 off the original list price. And as you can see here, that is kind of trending sideways. However, it is still on a downward trend, but very, very slow. So if you compare this straight line, so I would say it seems more like a capitulation, but I don't think we have enough buyers to take advantage of that just yet. And we will see that in the active listing graph. So here you can see, as far as days on market, that is still dramatically increasing, which tells me there is still more room for the buyers to come down to meet the sellers where they're at, meet the buyers where they're at. But this all depends if there's enough buyers. And let's see that very soon. As far as sold price goes, you can see the correction. So we had a sideways trend about here, May, June. And then you can see about here, that's when we started correcting. Now, each of these segments is about 50,000. So I would say that's almost about a 15,000 drop. And now looking here, this is where the problem is. So you can see for the last 2 months, we've consistently been dropping the sales. There's not enough buyers for the amount of properties that is coming on the market. And as far as the listings that are coming on the market, they have actually been increasing. So this is different from what we saw in detached and duplex homes. And that is going to have a huge downward impact. So definitely capitulation hasn't happened yet. There is a huge room for sellers to still come down, meet the market where it's at, and set the expectations right in terms of marketing. And of course, if your marketing is not good, if you're not listing correctly, then you'd have to drop a lot more because you're getting less eyes on it. You're not showcasing the best parts of the property. So that is extremely important, but it's still possible to get top dollar based on the current valuation of the property. Of course, everything was inflated. And it's important to understand that in the last 3 years, properties in Calgary have gone up by 30 to 50%, in certain cases even more. And so these are all 3-5% corrections. And so it's not really all that much. People are still sitting on a lot of equity, and it's important for them to set the expectations correctly and realize that the market has changed, which I feel a lot of sellers don't actually realize, which is the importance of making this video, so that you understand that both as a buyer and seller, where your opportunities lie. Now, looking at the active listings, so as you can see here, 1,200 new listings, but as far as sales, 283 sales. Last year, we only had 655. That is 50%. So that's like half of what we had. That's a huge difference. But the sales is about 60%, 70% of what we did last year. So not only has our inventory doubled, but we are not even selling what we sold last year. So that is obviously going to be a problem, and it's going to have a huge downward impact on apartments and on townhomes. But you're going to see it's very similar to apartments too. So apartments and townhomes is really where the problems are at in this particular market. So as far as the apartment sales, you can see we peaked around here. This year, we had no chance of even touching that. We were at 40 max per day. Now, did we sustain that roughly? Maybe a little bit, but we're already seeing that correction. Sales are dropping, people are getting out of the market, and so we are shifting down. And the unfortunate thing for sellers to see in this market is that our sales here, the peak sales that we are seeing right now, is what our winter sales were. And that makes you think, because now when we get into winter, will we be here? Will this be our peak? Because if we are already not able to set these levels, I think we're going to drop a lot more. And which is why next couple months, I wouldn't recommend people buying apartments. There's going to be opportunities. There's going to be a window when you can get really good deals, that you can cash flow, that you can Airbnb. There's going to be opportunities, but now is not the time. And this is a clear indicator of why. If you're not setting these levels, I would at least expect us to be around October levels in July. Then there's some hope. But if you're already not able to sustain those levels, and we have a downward trend line, which is sharper than last year, I think there's more trouble for apartments ahead. So as far as price drops go, you can see huge amount of price drops over the entire year. It did reduce a little bit around May. That's when a little bit of that market sentiment optimism was coming back. Of course, didn't last at all, and sellers now still need to correct a lot more, and sellers are far from where buyers expect them to be, and that's why I expect huge price drops to still happen in apartments. As far as days on market, apartments still on a constant upward trend for increase in the number of days that they're spending on market. Around May we were around here, more of a sideways movement, but after May the market sentiment has dramatically dropped, setting higher levels. Now when it comes to sold price, you can see the sold price right about here, stabilized sideways, and then now we're headed down for apartments. And as far as selling above and below this price, you can see again sideways movement and then a huge change in trend right around here, and we're going to constantly. The interesting thing to note is the amount of saturation. So we have bubbles of saturation here where a lot of properties sold below this price together, right? But they're sort of like bundled right around the same weeks. What you notice here is there's no gap, or almost no gap. Everything drops dramatically and fast. So that is also another indicator to read into. So the more you know how these graphs work, the more you can read into it. So there's a huge shift in sentiment versus having gaps like this here, where there are weeks where people are not selling below this price, but then there's a huge downward trend here. And so now you can see here when it comes to apartments, of course we peaked around June, a lot less apartments now coming on the market. However, still, I would say still decent sideways trend, holding up the inventory quite a lot. But our sales have been dropping now for 2.5 months. We peaked around, I would say even April actually. So we peaked around here, but for 3 months we've consistently been dropping. And we're almost, if you draw this sideways, we are pretty close to where we were already by last December, which is why I expect us to be even lower in terms of sales by December. I would say about there, maybe a little bit lower, maybe somewhere there. And so that was all the data update for based on segments, and this is before the market report even comes out, so you know what's exactly happening in the market. If you're already in the market as a seller or a buyer, now you have a better picture of what you're experiencing, and you're able to put numbers to it. You're able to understand why the sentiment is the way it is. And if you like this approach and you want to be more informed going forward, and you want to make intelligent decisions while entering the Calgary real estate market, definitely reach out. Doesn't matter if your game plan is designed for 3, 6, or 9 months. It's important to plan right now so we can put you in the right position. And sometimes it involves building your credit score. Sometimes it involves maximizing the way you do your registered accounts so that you're able to get more tax benefits. There's a lot of things, and a lot of, if you're looking for new builds, for example, there's a different timing depending on which builder is able to launch which project when. And so there's a lot of factors that go into this. And if that's you and you want to be informed, definitely reach out. My links are all in the description. And of course, as always, there's also free guides available, both a very, very extensive buyer guide that a lot of people have thanked me for and rave about. They absolutely love it because it goes more than just the steps as a buyer, but more into the psychology of a buyer and how to make the best decision, something that you will not regret in 2-3 years from now. And the other guide is a very detailed community guide so that you understand how Calgary is built, what the different communities are, what the options are, and which community really best suits your lifestyle and what you're looking for, and where your family is growing into and what suits you. So definitely check those out. Those are free to download. Links in the description. Also a link in the description to book a call with me so you can reach out. We can have that consultation call. Absolutely no obligation, but then you will be more informed and feel more equipped and better prepared for where the market's at right now. So again, it's not really all that bad. It really depends where you are, what you're positioned for, what your goals are long term. Sometimes, even as a seller, maybe now's not the right time for you to sell, and I will give you that advice. And so I would love to help you. Reach out, and till the next video, take care.